Next, accounts from incomplete records. From accounts from incomplete records, it is first question, that is, a trader keeps his books on single entry system. Okay, single entry means the trader, okay, that is the trader enters only one time only. Okay, these are all those basics of about a single entry system. Already we discussed on the basic, okay, basic question. Okay, that is the introduction of the single entry system. Okay, in this, his financial position. So that is, financial position means it shows that balance sheet only, and the balances, closing balances of assets and liabilities. Okay, that is the closing balances of assets and liabilities on 1st April 2017 and of 31st March 2018 values is given in this question. Means 1st April 2017 means it is opening. Okay, what is it? Is opening. Okay, values of, okay, assets and liabilities. And 31st March 2018, it is closing balances of assets and liabilities. Okay, how to identify means, so if it is a 2017, okay, next year it is 2018. So 18 we called as, okay, 2018, here it is closing the financial year, and opening financial year is 1st April 2007. Next, in this there is assets and liabilities is given. Okay, in this assets and liabilities, bank overdraft, okay, and furniture, building, investments, there is no value in the 2017, but there in the 31st March 2018 means closing value is given, that is 10,000. Then you can enter only closing, okay, closing values under closing statement of affairs. Next, debtors and the creditors, stock and zip also there is given. Okay, it is one of the fixed asset. So it is purchased on 1/10/2017. 1/10/2017, that is October of 2017. So if it is October of 2017, okay, there is no opening value of the jeep, and there is a closing value, that is 20,000. Means that is, this is the jeep can be purchased at 20,000 rupees. Next, cash 10,000 and 20,000, plant and machinery also is the same values. Okay, that is assets and liabilities. Okay, with these assets and liabilities, there is a there is adjustments is given, that is during the year he withdraw 10,000. He withdraw 10,000 for personal use, means it is drawings only. Who is he? Means a trader here. Okay, trader can withdraw. Okay, this is the 10,000. So if it is a drawings, okay, we should be deduct from opening capital and add to closing capital. Okay, this is also basics we have discussed under, already we are discussed in introduction of, okay, introduction of incomplete records. Okay, and for personal use, and 1/10/2017, and he introduced further capital of rupees 20,000. Okay, further capital means additional capital introduced, that is 20,000 rupees. Next, there is adjustments is given, that is, first, reserves for bad and doubtful debts is to be maintained at 5% on debtors. 5% on debtors. While reading question, we should be identify, okay, maybe after reading these 4 adjustments, we cannot remember, okay, adjustments while, okay, while calculating these are the so and so on. So that is the reason, first of all, you should be given a numbering to this is the values. Okay, so once you can see, reserve for bad and doubtful debts, this is the reserve for bad and doubtful debts is 5% on debtors. This is the reserve for bad and doubtful debts is calculated on debtors only, no? So first of all, you can give a numbering to this is, okay, under particular column, straight to debtors. Okay, this is a shortcut to, okay, solving problems. Next, plant and machinery to be depreciated at 10% and furniture 5% and jeep at 10% also. Okay, so this is depreciation, we should be deducted from various assets. Okay, so depreciation on machinery. So for machinery, it is plant and machinery, it is second number, and the furniture 5%. For furniture also it is second number, and the jeep also it is second number, like this. Okay, if you know this, okay, we can easily identify this is the adjustments. Okay, next, appreciate building, this is the third adjustment for building. So the appreciation means increasing the value of building, appreciated. So we should be add to building, it is a income. Okay, there is a So our benefit to the organization, then we should be add to buildings, it is income, like that you can treat it as a gain. Okay, and debtors include 1000 from an insolvent customer. Okay, insolvent means that is the one of the debtor as went to liquidation. Okay, he's in his business also. So that is the reason we cannot recollect from that customer. Okay, that is a debtor, one of the debtor. So this is a purely, it is called as bad debts. Bad debts. Okay, this is the bad debts, should be deducted from debtors only, na? So for debtors, and okay, again you can given a number, that is 5. That is 5. Okay, sorry, 4. That is the fourth number. Okay, so like this you can given a numbering to the one, and finally ascertain the profit or loss and prepare statement of affairs. Okay, this is only is given, and we prepare closing balance sheet also. Closing balance sheet as on 31st March 2018. For 31st March 2018 it is a closing, but 1st April 2018, sorry, okay, 1st April 2018 it is opening balance sheet. Okay, it is opening balance sheet to the next year, closing balance sheet to the 31st March 2018, and it is a opening balance sheet to the 1st April 2018. From after, this is a single entry system. Okay, whenever we are converted, okay, single entry to with adjustment, it is as a double entry. Then okay, then so opening balance sheet, it started with 1st April 2018. Okay, so with that values the business going, okay, from that date onwards the business is going to be continuation with the double entry system only. Okay, double entry system only. So hence finally we should be prepared profit or loss and prepare statement of affairs and closing balance sheet also. Okay, closing balance sheet also. Okay, so before once we can solve one by one, that is first solution from incomplete records. From incomplete records, it is first solution. So it's a bank overdraft 10,000. Bank overdraft is a liability, so right under opening, okay, 1st April 2017 values, and right liability side, it is a liability, na, bank OD. Bank overdraft, it is 10,000 rupees. Next, furniture 20,000. Furniture, it is asset. Furniture is asset, so right under asset side. Next, buildings, also it is assets. Buildings is a 70,000. Next, investments, so there is no investment value in this, okay, in the year of 1st April 2017, so no need to write. And the debtors is 20,000 without adjustments. 20,000. And creditors is a liability. Creditors 30,000. Next, stock is asset. Stock 45,000. Next, Jeep also it is asset, but there is no opening value. And cash is asset. Cash 10,000 rupees. And plant and machinery also it is asset, that is 40,000 rupees. Okay, like this every value should be entered in the opening balance, and just left it, and we can enter. Okay, we can prepare closing statement of affairs also. Okay, with before adjustment should be, remember, it is before adjustments. Okay, that is closing statement of affairs is first one, bank overdraft, that is 12,000 is a liability. 12,000. Furniture is asset 20,000. Buildings 70,000 asset. Investments, it is also asset. $10,000, and debtors 30,000 before adjustments. Okay, debtors, the value is 30,000, and the creditors is the liability 40,000. Creditors 40,000. Next, stock 50,000, assets 50,000, and the ZEEP value, that is 20,000. It is also asset before adjustments, 20,000, and the cash, it is 20,000, asset. Plant and machinery also asset, 40,000. Okay, now you can total this, all those ones. 20,000 plus 70,000 plus 20,000 plus 45,000 plus 10,000 plus 40,000. That is our opening balance sheet. Total is 40,000. Here also 2,05,000. 2,05,000, 2,05,000. Okay, and if you deduct, this is a 40,000 from, okay, from total assets, it is called as capital at the beginning capital. Okay, opening capital or capital at the beginning capital, that is 2,05,000. Sorry, 2,05,000 minus 40,000, 1,65,000. 1,65,000. Okay, 1,65,000 is the opening capital. And also compute closing capital. $20,000 plus 70,000 plus 10,000 plus 30,000 plus 50,000 plus 20,000 plus 20,000 plus 40,000. Total 2,60,000. So liability side also you can write 2,60,000. From 2,60,000, if you deduct, this is our 52,000 minus 52,000, then it is 2,08,000. This is the 2,08,000 is called as closing capital or capital at the end. Capital at end. Okay, as on 31st March 2018. Okay, already, okay, with this information we got that is a opening capital 1,65,000 and closing capital 2,08,000. Okay, 2,08,000. Now we can compute profit or loss, statement showing profit or loss. Okay, this is the statement of profit or loss. Already we discussed in the introduction of incomplete records. Please be referred before going to this one. Okay, and in this statement of profit or loss. Okay, first of all we should be start with capital at the end. Capital at end, that is as on 31st March 2018. 31st March 2018. On that day, it is a capital is, okay, the capital is 2,08,000 rupees. 2,08,000 rupees, that is all you can write. 2,08,000. This closing capital, add drawings. Add drawings. The drawings is, yes, during the year we to draw 10,000 for personal use. Drawings is a 10,000. You should add to capital at the end. Then 2,18,000 is the value. Okay, with this 2,18,000, okay, less further capital introduced, that is a capital introduced further capital, that is 20,000. Okay, less further capital introduced, that is 20,000 rupees. 20,000 rupees. If you deduct this is 2,18,000 minus 20,000 minus 20,000, which is equal to 1,98,000. 1,98,000. Okay. Okay. From this 1,98,000 less capital at beginning, that is as on 1st April 2017. Okay, so that is a 2017 capital, that is opening capital. Already we have prepared opening statement of affairs, that is 1,65,000. that is only opening capital. You can write here 1,65,000. Now it is 1,98,000 minus 1,65,000, which is equal to 33,000. This is a 33,000 is called as profit. Profit before adjustments. Should be remember, it is profit before adjustments. Okay, profit before adjustments. Now it is adjustments. Adjustments, you can write adjustments heading. Under this adjustments, you can write all those adjustments whatever it is given in this here. Okay, so that is reserve for bad and doubtful debts and so on. Okay, so first of all, we can write reserve for bad and doubtful debts. Before writing reserve for bad and doubtful debt, that is actual bad debts is there. Okay, so bad debts. So first of all, you can write less. Okay, bad debts, that is 1,000 rupees. Next, reserve for bad debt. Okay, reserve for bad debts, bad and doubtful debts, RBD. That is actually this is the RBD is given in the percentage. If it is given like this percentage, we should be computed on debtors only. Which debtors? Closing debtors. Okay, but before on this closing debtors we should be computed, that is 5%, but it is okay on this closing debtors first. Okay, we should be deduct this is the bad debts 1,000 rupees, and after that you can compute that is a 5%, that is means 30,000. actually it is a closing debtors minus 1,000 rupees is the bad debts. Okay, into 5%. Okay, that is 29,000 into 5%. The calculation is 29,000 into 5%. 29,000 into 5%, which is equal to 1450. 1450. Next, after that, after reserve for bad, okay, bad debts is completed and the reserve for bad debt also completed. Okay, under adjustments. Next, plant and machinery depreciated. Okay, it is also losses, na? So all losses we should be deducted. Okay, bad debts is loss, should deduct it, and reserve for bad debt also it is future loss, we should be deducted, and depreciation on machineries, furniture and jeep also it is loss. Okay, decrease it. So depreciation on plant and machinery. So what is the plant and machinery value? That is 40,000. On 40,000, okay, depreciation value on plant and machinery, it is 10%. So directly you can compute 40,000 into 10%, which is equal to 4,000. Rupees. Next, depreciation on furniture, that is furniture value, closing value of furniture is 20,000 into the percentage is 5%, into 5%. Okay, which is equal to 20,000 into 5%, 1,000 rupees. Okay, like this you can compute it. Next, jeep. On jeep also it is 10%. The jeep value of us, okay, is 20,000. Depreciation on jeep. Actually, it is Jeep can purchased on 1/10/2017. Okay, it is purchased on 1/10/2017. If it is purchased 1/10/2017, so we should be calculate depreciation from 1st October 2017 only. Okay, from 1st October 2017 to 31st March 2018. Okay, that is how many months? October, 1st October also we should be compute. October month also computed. October, November, December, January, February, March. So total 6 months. We should be calculate the depreciation for 6 months only. Okay, so that is 20,000. G value is 20,000. The percentage is 10% into 6 divided by 12. 6 divided by 12. Which is equal to 20,000 into 10% into 6 divided by 12. That is 1,000 rupees only the depreciation. Okay, these are all those adjustments except appreciation of the building. Appreciation means this is increasing the value of the building. Okay, that is a benefit to the organization. We should be at that is a appreciated value of the value to the building. So now it is 1,000 plus 1450 plus 4,000 plus 1,000 plus 1,000 again. So with addition of these 5 values, it is 8,450. Okay, this is the 8,450. We should be deducted from 33,000 less 33,000, which is equal to 24,550. Okay, so from this 24,550 we should be add appreciation of building. Appreciation of building. That is appreciation of building value is 20%. Actually building value 70,000. 70,000 into 20%. 70,000 into 20%, which is equal to 14,000. We should add this is the 14,000 to 24,550. So total 38,550. 38,550. This is called as net profit. Net profit for this year. Which year? From this profit is from 1st April 2017 to 31st March 2018. Between this year, the profit is 38,550 only. Okay. So after this is only the main question. Okay, the advanced one. Okay, and the advanced one, that is we should be prepare closing balance sheet as on 31st March 2018. Okay, after these adjustments, we should be prepare new balance sheet. Okay, that is closing balance sheet. Okay, these two tables are, it is statement of affairs. Okay, these statement of affairs we should be prepared only with the values, opening values and closing values. Okay, and the new balance sheet we should be prepared after deducting and addition of these adjustments. Okay, to this. Okay, what are the assets and liabilities? Okay, then we will get new values of assets and liabilities. And the balance sheet, closing balance sheet, the preparation of closing balance sheet, every value, closing values only we should be consider, and with this closing values we should be adjusted or deducted or added. These are the adjustments. Okay, so we see first one, it is a bank overdraft. There is no adjustment for this bank overdraft. It is a liability right under bank liability side. Sorry, bank OD. Bank overdraft, it is 12,000 rupees. Next, furniture 20,000. It is assets right under assets. Furniture right first column, because of there is adjustments like this you can identify. Okay, there is adjustment to that or not. Okay, that is 20,000 rupees. Then write first column less depreciation. That is depreciation is Which one? Second adjustment. Go for second adjustments, and the depreciation on furniture is 5%, that is 1000 rupees. So 20,000 into 5%, which is equal to 1000, that is 19,000 rupees. That is 19,000 rupees. Okay. And after furniture, there is a building. The building value is 70,000. Right, building 70,000, 70, less appreciation. The appreciation value of the building, it is 20%. Okay, that is 70,000 into 20%, which is equal to 14,000. If you 70,000 for this to 70,000, if you add this 14,000, then it is 84,000. Okay, the value of building now it is 84,000. Next, investments. There is no adjustment. Directly you can write value. Investments, the value is 10,000. Next, debtors. There is a first adjustment and fourth adjustment. Write debtors. The debtors value is 30,000. Okay, for this 30,000, less bad debts. The bad debts is 1000. Okay, fourth adjustment, 1000 rupees. So it is 29. On this 29, less reserve for bad and doubtful debts. Okay, that is 29,000 into 5%. 5% on debtors, no? So 29,000 into 5%, which is equal to 29,000 into 5%. Already we have calculated, that is 1450. 1450. Okay, from 29,000 minus 1450, which is equal to 27,550. So for this debtors, first adjustment and fourth adjustment, both are adjusted. Okay, so it is completed one. Next, creditors. It is a liability. Creditors, that is 40,000. There is no adjustment for creditors. And stock 50,000. Closing values. Stock 50,000. Next, zip. There is adjustment, second one. The value of zip is 20,000. Okay, on this 20,000, zip depreciation 10% for 6 months only. Less depreciation, that is 20,000 into 10% into 6 by 12, which is equal to 1000 rupees. So it is 19,000 in the outer column. After zip value, it is cash. Cash is 20,000. Next, plant and machinery. There is adjustment value, that is second adjustment. Plant and machinery, the value, closing value is 40,000, less depreciation. Okay, depreciation on plant and machinery is 10%, that is 40,000 into 10%, which is equal to 4,000. If you deduct 4,000, it is 36,000. Next, so all those assets are also completed. Now you can total the liability. Okay, liabilities and assets. Okay, from liability side, okay, main part is missing, that is capital. Here only, so we should be careful about this. Okay, capital. This is a capital at the beginning. Okay, beginning. The beginning capital is 1,65,000. That is 1,65,000. Beginning capital 1,65,000. For this capital, as per our financials, financial accounting, final accounts, basic account, final accounts. Already you have seen that is we should be add net profit and deduct the drawings and add. Is there any additional capital introduced? That is only you can do now. Okay, add opening capital. Opening for this opening capital, you can add net profit. The net profit already we have computed, that is 38,550. Then it is 1,65,000 plus 38,550, which is equal to 2,03,550. 2,03,550. Next, add additional capital introduced. Additional capital. Introduce additional capital, that is further capital introduced 20,000. 20,000, which is equal to 2,23,550. Next, after that, less drawings. Drawings amount is 10,000 rupees. Okay, or otherwise directly it is given drawings 10,000 rupees. Okay, it is given in the question. If you deduct this 10,000, 2,13,550. 2,13,550. Now you can total the balance sheet. Okay, both sides should be equal, then only the answer will be correct. 2,13,550 plus 12,000 plus 40,000, which is equal to 2,65,550. Next, 19,000 plus 84,000 plus 10,000 plus 27,550 plus 50,000 plus 19,000 plus 20,000 plus 36,000. 2,65,550. Okay, so that is only the totals one, 2,65,550 and 2,65,550. Okay, so this is only the preparation of balance sheet after after whatever the adjustments. Okay, so computation of this is a profit is important, that is opening capital, net profit, additional capital and drawings also. Okay, if you calculate like this sequence wise, then this answer will get easy.